Hi, everybody. It's John Baranowskis from Speak on Labs. Hope you're all doing very well. We're doing a new show. It's going to be called Straight Talk with John. I want to tackle some topics not frequently discussed by the advisors that, for the most part. For example, not a lot of folks in my industry are tackling real estate investing. We talk about it, with their clients as part of their plan, as part of the income, but to actually dive deep and just really understand what they're doing, it's more or less out of our purview. And to be honest with you, that's because we're just not necessarily compensated on it from an AUM model. And from our perspective, since we do a lot of fee-based planning, fee-only planning, it makes sense to just sort of understand more. So I brought on a couple of guests today. We're going to get the show started. So just hang on just 1 second. All right, Tim, Mike, thank you so much for coming on. I really appreciate it.
Thanks for having me.
Yeah, guys. Yeah, man. You're always top of my list. We've been best friends for a long time, and we're coming from different industries, but we kind of tend to have a conversation about investing, whether it's real estate or just in general. A lot of times, anyway. Mike and Tim, they work for a veteran-owned real estate company called Homefront Properties. I know a lot of most of your business is usually owner-occupied homes, but a good chunk of it is for investors as well. The majority of my clients either have rental properties or considering it, and I just want to pick your brain a little bit on a couple of topics. First off, just from the last 8 months with COVID and just how everything is sort of reset. What has that taught you guys? We'll let Tim go first and just kind of go round robin if that's okay.
It taught me that as well as you think you know something, you don't know it, because anything can change at any given time. What was normal in February is not normal now in November, and what's normal in November necessarily wasn't normal in September. So you have to adapt and change to whatever's thrown your way, and we see that a lot in real estate, whether it's buying houses sight unseen, doing virtual tours, stuff like that. It's really changed the industry in regards to purchasing homes and stuff along those lines, general properties, and then like we're going to discuss on this call about investment properties.
Mike, how about you?
Well, Tim covered a lot of that, but what I would say is one thing that we take for granted in our business are third-party vendors, mortgage companies, our title. And as soon as lockdown happened, there wasn't a lot of homes being sold. But then as soon as the restrictions were lifted and the quarantine was lifted and all that, and we were allowed to go back out and sell homes, title companies and mortgage companies were flooded, changing dates, long delay, long settlement dates, 60 days, even past 60 days. And really just it helped you get a better grasp of the process, and understand what type of workload and they're under as well.
It's interesting because if you're looking at this from a strictly investment side, if you're getting delays because of vendors, that could hurt your rate of return, right? If you have to wait another 6 weeks or whatever it is because of something that that happens, that really can hurt you. So that's good to know. It's good to disclose. Thank you for sharing that. Mike, I know you've done some work with some flippers, some investors and doing the flips. You told me before that you basically create an LLC for that. I think one of the questions that people are trying to just figure out how to get started. So can you walk me through that process? You create the LLC, you flip the home, and then do you let the LLC die in a vine, or do you create a new one, or how does that work? What's the process for that?
Oh, that's a good question. So, if they're looking for investment properties, it depends on what you're looking to do. Like if you're looking to have rentals, you don't necessarily need the LLC, because what I've learned is that if it's in my name, if it's in my name, Mike Gabriel, and I go to refinance it, and I'm going to the bank and getting regular terms, no conventional. But when it's in an LLC, it becomes it becomes commercial financing, which can make it a little hairier. Mm-hmm. And that's got different rates and different terms, like years, 20, so it's, for the 30 year. But yeah, so also that's one thing you could do if you're on the flipping side, if you're doing it with an LLC, yes, you can let the LLC kind of die on the vine and start a new one with a new property.
Gotcha. Tim, anything to add to that?
No, I think Mike pretty much covered all that. As far as like anything else, it's good to speak with you and maybe your tax expert to see what structure would be best for you and what your short-term goals are, and ultimately what your long-term goals would be.
Yeah, I put that in disclosures for that little that little AV demo there in the beginnings, because I because you don't want to get screwed as giving any type of recommendation on this, because it's so far out of my purview. But yeah, I mean, I think there's all these different tax breaks you can get from like write-offs from from depreciation, from from the cost of from adding it to a cost basis. So yeah, I think you need to talk to your tax advisor. You probably need to talk to your financial advisor, see how that fits in the overall picture. But yeah, I think that's correct.
Yeah, and if it isn't an LLC, the one thing I forgot to mention is like you have to think about how you're going to accept payment, right? Because it is a business. If it's a rental, like you have to have there's a bunch of things you need to set up at the bank, so that when your tenant is saying, okay, here's the payment to Mike Gabriel LLC, well, that's what it's got to show as at the bank, so that the bank is up. So just something else, another layer of things to do. So to speak.
Makes sense. Cool. All right, moving on here. Just kind of keeping it flowing. Low income housing has sort of been. I've seen that bubbling up on my side more and more, whether it's through a REIT or just in conversations. Obviously the last 4 or 5 months since the real estate market's been back open again fully, we've seen prices kind of have a lot of volatility, to say the least. Do you think that's hurting affordability? And do you think it's a hedge against the economy, because people need a place to live regardless, right? But do you think there's that trade, for lack of a better term, is being crowded out by just everyone's trying to get into that at this point? I think there's still more room to go there.
I still think there's more room to grow in there. But my thoughts are it has to be bought right. No matter what no matter what the market's doing, no matter what things are going for, like it just if you can buy it, in the beginning on the right terms, you should be okay. And you want to be like, if it's a rental property, you're up and rent it, you need to be at a certain loan to value number, so that when you go to if you ever need to refinance it or anything, you're still at an 80% loan to value number, and you're in a good position, and moving forward.
Gotcha. Tim, anything to add there?
Yeah, I mean, like what Mike's been saying, I do think there's room for growth there and stuff like that. It just got to give it some time and see, how the dust settles and what your needs are. Do you need to move now? Can you wait 6 months? Can you wait and see how everything, if the dust settles? If not, talk to one of us and we can, come up with a plan for you, see where ultimately you want to go, and what we can do for you. Makes
sense. Yeah, I think it's interesting. Like the last 6 months reminds me a lot of like 2005, 2007. It was a little before, like we were still relatively young at the time, but people were excited to buy real estate because they saw the prices were kind of just, they're moving like an investment less than a place to live. And that's sort of come back, I think, in a big way. Anything to add on that, or do you think that's right on?
Well, I'll attack this from both sides. Like if I'm working with a buyer, I let them know that if this is their home that they're going to be living in, you got to understand that this is not an investment property. If you're buying an investment property, it's going to be looked at, much differently. If you're moving in here because it's where your primary residence, our goal is to just not get you to pay too much, because with everything with all the craziness going on, our goal is to just kind of make it to you're not overpaying. Now, from an investment standpoint, with all that being said, there's still bills out there. There's still homes that sit on the market for a while that have a problem that need to be addressed. We just have to make sure that the rental numbers work. well.
There's a question for you too. Is do you see? Do you guys actually run the numbers for people as far as what the expected rentals are going to be, as far as if they put money into it, or do they pretty much on their own? And how do you come up with your assumptions on your side, if you do?
I'm big on renometer.com. I use that, and I found that from Bigger Pockets podcast. And I a lot of my clients find that it's extremely accurate for single and multifamily. Now, when you get to higher level stuff like 5 units and above, that's a different analysis. But with these, with about 4 units and below, this is perfect. And we kind of look at like, okay, we also go into the MLS and see what other rental properties are renting for, and what the condition of those, just like a home sale, and try to see, okay, if you fix it up and make it look like this, you may be able to get $1,200 a month, $1,500, and that way they know going in what they need to do.
Yeah, and to echo off of what Mike's saying is, like, on our end, we have realtors that handle just buying aspects. We have listing agents. We have commercial real estate. So really, you need to talk with an agent, or in our case, our team, where we have expertise in all those areas. We're not going to sit down with you and try to sell your gas station if we don't know what we're doing. We're going to pass that off to people in our division that handle commercial real estate. Mike does really well with investment property. So if I'm uncomfortable talking with somebody about running numbers or something like those lines that I may be second guessing myself, we never want to second guess. We always want to try to approach in anything that we do with the most educated, information that we have. So I think that's really also important, is knowing, your areas of strength and asking for help when you need it, and making sure you're working with the right team.
Gotcha. Okay, we'll move on here. So Airbnbs, we've been discussing this for about 5 years now. Different aspects of it. You guys have dove in with a lot of different properties at this point. It's interesting to me because it's not just the passive income that you get from a rental. There's actually an active part of it where you got to manage the thing, right? It's not as easy as it could be, but there's a payoff. You're getting a higher rate of return for that. What's the team like to assemble that? I mean, I know your wife's a big part of the property management side, but what do you need to make that work? And what is the cost of the property management as a percentage of your overall revenue, and how much does that cut into your profits?
Well, I mean, what I would say, if you were to go with Airbnb, for how active it is, if you're doing a long-term rental, if you were renting by the year, and it's a regular rental property, typically a property management company charges 8 to 10% and monthly. And then if you're doing a short-term rental, from what I've seen and what I've heard, and what I've used, is it's a lot higher of a percentage. They take about 25%, and it's because they're at the property a lot. They're most likely cleaning the property as well. They're also the cleaning company as well, and they're advertising it, and they're using it as they're pushing it under their name as the superhost. So, but yes, it is not passive income. It is something that has to be worked on almost daily. It's not an all day thing, but it is something that my wife spends a few hours a day on.
Yeah.
Yeah, and I think anyone that's looking to get into the Airbnb market, is you have to come from a place of service. You're entering into the realm of the hospitality industry. You get a phone call at 11 o'clock at night from your neighbor that says your guests are rowdy. Well, you know what? I don't care if you're asleep. You got to get up and answer that call. It's just not sitting back collecting a paycheck, because that's going to taint the entire industry, and that will shift where we're going now from hotels and stuff like that to an Airbnb, where people want more space and feel like they're away on vacation, but they're more or less at home. And if Airbnb host and owners don't provide that, well, then the shift's just going to go back to the traditional hotels with true hospitality.
And you see that happening, right? I think in every hotel I've been at the last couple of years, you see them remodeling and putting like full kitchens in, right? And like a little like pull-out couch, along with the thing. So that's definitely taking place. The other thing I was going to note is like there are these companies out there. I discuss this all the time. The Sondairs of the world that actually make the Airbnb experience like a hotel. They put the white linen sheets in, they put the mint on a pillow and things like that. And I think you're right on, Tim, that you have to go in this with the mindset. It's not. I mean, like Mike said, it's not passive income. And then two, you have to go in with that. You're going to have to learn how to be in the hospitality service if you want to do this successfully. So that's great advice. Thank you. A lot of the conversations I have with our clients and prospects, you can almost see a little glimmer in their eye when they discuss the balance between real estate and like equity markets. And I think it's about because one's real. You actually can go to your Airbnb and like do a survey of it and say, this is something I can like live if I had to. While the market is it's more in the air. It's more fugazi fuguzi, I guess, for lack of a better term,
Yeah.
right? So realistically, the growth is typically in line with like real estate. If you back out the leverage of mortgages and things like that, you can pretty much get a REIT and probably get the same return on some level. But if you do things yourself, such like the hospitality side, such as the service, such as maintenance, you probably can you can outperform, right? So I guess what does the mindset have to be? I think a lot of people they get real excited about it. They fall flat and pulling the trigger because they realize there's a mountain of work ahead. So I guess what do people, besides what you guys have just talked about, what else do people need to know about that before they go forward?
I would say, if anything, if it's short-term rental, and you got to understand that it's going to be work. Like Tim said, you got to, you're providing a service. Remember, it's a business. You got to provide a service, and you have to think about what your service is going to be. Is it the Poconos? Is it the shore? Is it, then dive in and learn those numbers. And then I would also say that, if it's a long-term rental, I would say just you need to understand what you can provide somebody, how your property, you can make your property get rented first and be competitive. It is a competitive market. There's a bunch of, if you look up Philadelphia, there's a bunch of properties right now for rent that are being rented right now. Oh, there's a housing shortage, right? So it really, you would think that people would just be happy to rent this property, right? It's a rental. They're not going to do it 30 years on a 30-year mortgage.
Yeah,
you'd be surprised. Little things go a long way. If you can, things like letting them use the garage for storage, granite countertops as opposed to linoleum. Like there's all kinds of or like, and there's all kinds of little things that can, in the budget, you can do it and make you an edge.
Yeah, and the only thing I would add is you need to be true to yourself. You need to sit down with yourself and you have to ask yourself the simple question: is this for me? This is going to be a grind. I gotta put work into it. It's not buying a CD or a bond where you buy it, you sit back and you do nothing to it. You have to put the work in. If you're just a jobber that just likes to work 9 to 5 and, at the end of the day, shut your phone off, be with your friends and family, that's great. If that works for you, but investing in real estate may not be for you. So, and then like Mike was saying with the granite countertops and stuff like that, you have to, what is going to separate you from the guy next door? Why is somebody going to want to rent with you, whether it's short-term, long-term? What are you bringing to the table that's going to make your offer look more attractive than the guy down the street?
John, can I add one more thing?
go ahead.
Well, if you look, and if anybody's any of the followers here on this podcast, and I would say go on Realtor.com and see what's for rent in the higher end markets. $1,800 to $3,000. Single family home in the Philadelphia metro area. See what's for rent. There's nothing. It's a very underserved market. The single family homes, if you have somebody that needs to rent, that they just moved here for, they're working with Merck or pharmaceutical company out near Lansdale and this whole area, they're looking in this area to rent something. Unless they want to live in a little apartment or a 3-bedroom, a 2-bedroom apartment, there's not a lot of inventory for them to rent. I think it's a huge demand. And it always think about like what type of market can I corner? What type of people aren't being served here? And that mindset, I think you could do really well.
It's interesting. I think to my takeaways, you need a business plan and you need to look at the market before you dive into it. Mike, you hit on something a little while ago about, you didn't mention it directly, but you mentioned about using your garage. You talked about house hacking before with me. And if people are just trying to find ways to generate more income, I mean, I'm not suggesting that's always a good idea, but just can you share with me what you've seen in the past with that and just how that can help people out?
I've seen, yeah, and I think it's the most creative way. I've had a few friends that did that when they're in their early 20s in the beginning, and they started off, they had a split little home, and they would rent rooms out to people they knew, and so it was a guy living with 2 other buddies, and then maybe renting out his garage. That's, and it's not, I don't know if that's the traditional term of house hacking. Usually what house hacking means is like you're living in a duplex, you're in one unit, and then you're renting out the other, and you're living almost mortgage free. But
yeah.
Everybody wants a duplex right now. Everybody wants a triplex. Everyone wants a quadruplex, and they're so expensive. So where can you go, right? Like, and this is what I've been trying to point my buyers, like in that market. Like, well, are you open to, buying a twin home and having somebody live downstairs, then maybe sharing the kitchen? If there's 2 bathrooms, are you okay with that? And rent it to somebody somebody looking, and get them on their lease. There's all kinds of ways. You just got to be creative. I mean, over in on the West Coast where mortgages are so, house prices are so expensive, there's a lot of that going on where they're renting rooms out for $2,000 or whatever because it's the properties are 1.2 million. So you just got to be creative and open to new things.
Nice.
And not be afraid to fail.
Right.
Yeah.
Just if you do fail, learn from what mistakes were made and what you can do better, and just keep pushing forward.
I guess the good news with real estate is unless you burn the house down, like there's always a value there, right? I mean, like it's not like it's not like you can't just. I mean, you can put in a bad color of paint and you can just repaint it, right? I mean, it's not the end of the world. So nice. Okay. All right. Cool. That's pretty much all I got for today, guys. Anything else you want to add before we wrap up, or does that sound pretty good?
I would say, I've made some mistakes along the way with my own journey with real estate investing. I always talk to you guys about that property on Frankfurt Avenue that I have that I started off small and after my 3rd property, I tried going big. And that's a mistake that I made that I own. And I tell all my clients about it because it was a great, learning lesson for me. And, I would say start off smaller, even if you do have a lot of capital. I would start off smaller and get your feet wet and see how the process goes, see how easy it is to rent out or how difficult it may be, and go from there. I mean, but at the end of the day, I don't regret any of it. I had to evict somebody in West Philadelphia. It wasn't the best scenario, but I paid an attorney to do it. At the end of the day, we still made great money off that property. The terms we bought it on the right terms. So at the end of the day, I'm still, I still would have done it all over again.
Nice. Tim, any last thoughts?
No, I think Mike hit on a lot there in that last segment. Is there's a lot of people out there that have done this right, and there's a lot of people people out there that have done this wrong. So, when you're getting your information, get it from both sides. You can save yourself a lot of headaches by learning from people's mistakes in the past. And then, just go from there and just make educated decisions.
Nice.
One
All right,
thing
guys.
I've noticed, one more thing. One thing I've noticed in people that have gotten out of real estate investing are the people that felt the need to do everything themselves. They didn't hire anybody. They're always down at the property, fixing toilets themselves, trying to figure it out things and trying to save a buck here and there, and they get burnt out. So something to consider.
That's interesting. That's good advice. All right. Well, thanks, guys. We'll have to have you guys back on real soon. Again, this is Straight Talk with John. Thanks for listening, and we'll be back soon. Thank you.
Thanks for having us.